Welcome to Trends with Benefits, a podcast by VanEck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
I'm Ed Lopez, and this is Trends with Benefits, and my guest today is Joe Foster. Joe Foster is a geologist by training, a gold strategist here at VanEck, and an award-winning portfolio manager. Joe, thanks for joining me this morning.
It's good to be here, Ed.
You've been at VanEck for how long? Well, since 1996.
Almost 24 years now. I started in 1996.
And before that, you were a geologist in gold mines.
I worked as a geologist in Nevada for over 10 years before that.
Where are you from originally?
I was raised in California.
In California?
I haven't lived there since I was 19 years old, but my family's still there, yeah.
Was geology always kind of an interest of yours?
Well, my interest was in mountains, actually. I started backpacking with my friends when I was in high school in the Sierras, and that became a sort of a passion. I just loved being up in the mountains, in the wilderness, out, wild areas like that. Not thinking about geology or anything, just enjoyed being in that environment. It wasn't until later when I went to college. I went to school as an undeclared major for 2 years. I always believed that you should involve something you're passionate about or something that you really enjoy in your career choice. So I would take classes, philosophy or, history or, things that I might have been interested in. I took a geology class in my sophomore year and started learning about faults and mountain building and, plate tectonics and the way the earth works. And that was it. My first geology course, I knew that's what I wanted to do. So yeah.
And that was at where was that? That was at
Tennessee
Tech.
Tennessee Tech. So my family had moved to Tennessee. My dad got transferred in his job to Nashville, and so I enrolled in Tennessee Tech in my sophomore year.
And then after Tennessee Tech, you went on to McKay School of Mines in Reno?
Yeah, Mackey School of Mines.
Okay.
Sorry, that's the Eastern pronunciation, I guess. But
well, that's weird. I'm from the South.
Okay, yeah.
Been here too long.
I went to grad school, moved to Reno to go to grad school at Mackey School of Mines. And little did I know at the time, but I was moving into one of the most prolific gold producing regions in the world. Nevada was an emerging gold producer at the time, and it has since become obviously one of the largest gold producers in the world.
And so that was outside of Reno or in Reno. Were you close to the casinos? Did you also learn about probabilities and gambling? Are you much of a...
My first job moving to Reno was I got a job as a cage cashier in one of the casinos there. So I did work in the casinos when I first moved there. Pay the bills.
Yeah. Where do folks and miners even begin to start looking for gold? Is it something about the geology or the map or the I don't know, the landscape that might be gold there?
It's hard rock, what we call hard rock geology, and these types of metals deposits form typically in mountainous areas. Going back to my roots is, backpacking in the Sierras, so, obviously Nevada's a very mountainous state. But when you get faulting and igneous activity, when you get into those types of terrains, that's where metals deposits form.
And when did you make the move over to investment management? How did that transition happen?
So when I was in grad school, I also got an MBA in the process. So I never used it as a geologist. So I had been working I'd gotten married, started a family. We moved to Winnemucca. I worked as a mine geologist where I could be home every night. Exploration, you're out on the road all the time. But raising a family, I wanted to be around my family, obviously. So I took a job at a mine where you go out to the mine, you do, it was still exploration, but just around that, specific mine area, and you could come home every night and see your family. So I did that for 8 years, and I still hadn't used my MBA. So then I started thinking, it's got time for a career change or at least, shift gears a little bit, do something a little bit different. And I decided to try to combine my experience as a geologist with the MBA that I had, sitting on a shelf all this time.
How do you think your background in geology informs your decision making now as a portfolio manager and a gold strategist?
In my mind, that background is invaluable because I can, first of all, relate to mining. I know the language. I know the people. I can relate to the mining business very well. I think where it really is an advantage is that I think we can come to an investment decision much quicker than many of my peers that don't have that background. We run our models internally. We don't need to seek any outside help. We don't need to look for opinions from other analysts or sell side research or anything like that. Internally, very quickly, we can reach an investment decision based on whatever information it comes available to us.
In your opinion, is gold a commodity or a financial asset these days?
Gold is a financial asset. It always has been. I mean, since gold was used as a form of currency, since 600 BC. When I'm talking to people, lots of times they want to know what's the supply demand look like. Are people buying gold jewelry in bars, or how much production is coming out of the mine? I mean, those supply demand issues are important, but they're not the primary driver of gold. The primary driver is gold as a financial asset. You have to look at what the Fed's doing, what are interest rates doing, what's going on with currencies, what's the geopolitical landscape, what's the effect of coronavirus on the gold market. So more macroeconomic and financial drivers for gold than other commodities for sure.
So weddings in India, not so much in the long term.
The underlying, really, we call that physical demand, and that becomes more important when the gold price is down. When we're in a bear market, when the price is weak, you see more of that, what we call physical demand. There's more buying of jewelry when the price is down, and that tends to put a floor under the gold price when gold is in a bear market. But when gold is trending higher as it is now, the financial drivers kick in, and that's what really drives the price.
Is gold still the hedge that it's traditionally known to be in financial markets?
Gold is a hedge against systemic financial risk. Anything that affects the global financial system or the global economy will drive gold as a hedge against those risks.
Even if inflation doesn't come back up?
Yeah, so it doesn't have to be inflation. Inflation is just one type of risk. It could be deflation, it could be banking failures or currency crises, or right now the coronavirus, the impact that might have on the global economy. So no, it doesn't have to be inflation. Any type of systemic financial risk will drive gold.
Do you think that's unique relative to other financial assets?
Gold really has a unique role to play in the financial system. There's nothing else like it. And gold really, it's not in the financial system at all. It sits outside of the financial system. When an investor owns gold, you own it free and clear. It's not somebody else's liability. It's not like owning a stock or a bond where you're dependent on the company to pay a coupon or to drive their stock price. You own gold free and clear. And so because of that, it's a very unique financial asset in addition to its role as a hedge against financial risk.
And how do you think about investing in gold bullion versus gold miners? If you want to get access, or if an investor wants to get access to gold or gold exposure, how would you advise looking at those two different options?
Well, in different parts of the gold cycle, it pays to own one or the other, or at least rebalance your portfolio. It's always good to be diversified. So holding gold and gold miners is a good thing just for diversification purposes. But when you're early in a cycle like we are right now, I believe we're in a secular bull market, the early days of a secular bull market for gold. Early in the cycle, you're better off owning the miners. They have more leverage to gold at that point, and they'll generate better returns early in the cycle. As the cycle matures and reaches its climax, you're probably better off maybe rotating out of stocks into gold at that point.
Can we talk about the basis of your of that bull market cycle that you see right now? What what are the factors that are helping to propel it in the new cycle for gold?
The biggest factor in my mind is that this is the longest expansion on record, the longest bull market on record, and these things don't last forever. The Fed started raising rates back in December of 2015, and that became a headwind to the economic expansion. Now the Fed is cutting rates, trying to prevent the next recession. So to me, a downturn is inevitable in the next several years. And if we get that, that brings out all sorts of risks in the financial system. And the dominant risk is debt. This debt overhang will become a huge problem in the next economic downturn. I think that will drive gold to new highs.
And so all that's missing is some sort of catalyst to kind of change the dynamic.
Yeah, and we'll see if that catalyst or that black swan is this coronavirus. I mean, the economy is under threat now, and that could be the catalyst.
You've also written about ESG and gold mining, which I thought was a fascinating combination of topics. I think perhaps many people might think that gold mining is a dirty business, only in the sense that because you're digging up the earth. But you've also written that you think that investors in some cases have had misguided ESG expectations as it relates to gold mining. Can you explain that?
I think the ESG pendulum has swung way too far in one direction. A lot of investors are starting to look at investments solely through an ESG lens, and I think that's extremely misguided. I think as an investor you have to take a more holistic view. There are just some industries that are I guess I use the word cleaner than other industries by nature, and you just can't expect a high carbon industry to become a low or no carbon industry in the time frame that many people are expecting. So mining is it's a carbon intensive business, it's energy intensive, it's capital intensive. And from an ESG standpoint, you have to take that into account when you're viewing these companies and realize that the companies are making changes. They're making big changes, but they're not going to be to carbon neutral, in the next 5 or 10 or 20 years, or maybe even 50 years,
Right. You've written that other businesses have, I guess, the luxury of kind of deciding how they manage their business in a more ESG way, where gold mining is just inherently you have a metal that you need to get out of the ground that you use for industrial purposes or what have you.
Yes, I guess the extreme would be coal. Coal it's a mining business, capital intensive, energy intensive business, and it produces a product that is produces a lot of CO2. Right. That's one extreme, and the other extreme would be maybe an apparel business or somebody that sells shirts or something, and they have hardly any carbon footprint, and you cannot put those companies in the same basket. You have to consider the fact that what is being produced at the mines is needed throughout the economy. The low carbon companies could not exist without the products that the mining companies produce. So you have to keep that in mind and remember that. So I think more patience is required. And everybody wants to be carbon neutral, but the path to get there is going to be very different for different companies.
How have you seen gold companies change in regard to I guess ESG, or how have they either improved their processes in your mind, or how do they touch on the various E, S, and G components?
These companies have always, talking first about the E and S, the environmental and social aspect. Gold companies, they operate in remote parts of the world, all over the world. When we look at ESG, we do a lot of on-the-ground work. What are they doing on the ground in the environments that they're working in? And they do an excellent job. They always have. Since I've been in the business, they always have. The mine I worked at in Nevada, it shut down. It ran out of ore and shut down several years after I left the company. I was back in the area last summer, drove by the site of the mine, and you could not tell that there was ever a mine there. I mean, all the buildings had been torn down and sold for scrap or moved away. All of the dumps, the tailings, the leach pads had all been contoured, topsoiled, and sagebrush was growing. It looked like it looked like there was never a mine there.
Is that a normal part of the process? Are they required to repair that?
Every mine that gets built has a reclamation plan, and many areas require them to post bond to ensure that reclamation. We like to see this on the ground, examples like that. Also, when we go to visit mine sites, we like to see what the companies are doing on the environmental and social front. And you cannot operate in a community without taking care of the environment or looking after, providing in poor areas, providing education and hospitals. What gets missed is all the great work these companies are doing all over the world, places where governments and or charities or NGOs would not think of going to promote jobs and health and education.
What about the G part of the equation? Have you seen companies change in the way they approach either governance?
Yeah, that's a work in progress, and they've made great strides over the last several years. In the last gold cycle, there's a lot of mismanagement across the gold industry. Companies weren't looking after their costs. They were really not very good at allocating capital or generating returns for shareholders. And a hard lesson was learned, I think. I think companies have become much more responsible in terms of governments. They were also paying themselves too much, and so we've seen more reasonable pay structures, much better incentive structures across the companies. So the governance is much better today than it was a few years ago. Still need a bit of improvement, but it's definitely much better.
How do you approach ESG in your own investment process? If I call it, for lack of a better term, ESG, but do you have certain considerations when you're looking at different companies?
I wish the G wasn't there, because to me, when I talk, I can talk about environmental and social, and then I can talk about governments, but I can't group them. They don't, align very well in the conversation. So talking about the E and S in our research, environmental and social comes into play when a company has a new project. When they're building a new mine, that's when we want to know all about the environmental and social aspect. What's the community like that you're building this mine in? What are you doing for the community? What does the community expect? How's this going to play out over the life of the mine? Also on the environmental front, are there any environmental liabilities? Is it acid generating? Is there any ground issues? What are they? How are you going to mitigate them? How are you going to manage that through the life of the project? So all these things come into play when a company is first building a mine, a new project, and we need to know all about it at that point. The other times it comes into play is when we go to site and visit a company. Sure, I want to see the mill, I want to meet with a geologist and look at the maps and do all that sort of thing. I also want to see on the ground, what are you doing? What type of community engagement do you have? How are you interacting with the unions? What are your reclamation programs? Are you reclaiming any land? What are your environmental liabilities? All those things come out in site visits, and we want to see firsthand what the companies are doing.
You had any major surprises on those visits?
Not really. I mean, I can't think of any shocking sort of experiences. I've had some pleasant surprises. I mean, when I was in Ghana last year, looking at a property, they showed me some palm oil plantations that they had planted on some old tailings, and these are large tailings. I mean, we're talking like 10 soccer fields, a big tailings area that had been planted with palm oil trees that were thriving on these tailings. And they were in the process of turning that ground over to the local community as a palm oil plantation that it obviously could then use as a source of income and economic development. So yeah, when you see things like that, really positive impacts that a company is having on a community like that, it's very pleasing.
What's your thought on the potential for mining asteroids?
Not in my lifetime. I can't. Mining is risky enough on Earth.
Just curious. So, I came across an article, thought I'd ask you.
Yeah, I'm sure a lot will be written about it. I think they're sending a probe up to an asteroid. I think they want to land a human on an asteroid at some point. But as far as actually mining them and getting that material back down to Earth, not in my lifetime, probably not in my children's lifetimes either.
All right, how about a little bit more fun here, something more personal. How does a gold portfolio manager allocate their personal investments? Do you have typical diversification like other folks, stocks, bonds, cash, or are you all in on gold?
Oh, yeah. I mean, I have a higher weighting to gold than most people, I would guess. I mean, when I'm talking to investors, I think in any asset class, really, you have to have at least 5% in your portfolio to make a difference, right? And gold, you never want gold to be the centerpiece of your portfolio. You want it as a hedge. You want it as a diversifier, something that will do well when your other investments are doing poorly. So, I say 5 to 10% gold and gold stocks is a reasonable level in any portfolio. Personally, that number is around 15% in my own portfolio, but just because I know it, and also it goes with the current market. I mean, I think again we're in another bull market, so I think I'll do very well with that allocation.
What's one major trend you see playing out over the next year or several years?
I think this expansion is on its last legs, so that's going to be the thing that dominates the markets going forward. I think in the next several years, and again maybe sooner with the impact of coronavirus, I think we'll be into our next recession, and all of the risks that we saw in the wake of the financial crisis in 2008. Those risks are still with us. They're even more magnified now than they were then. The levels of debt, the radical central bank policies are still in place, and I think these things are going to get us into trouble financially. So I think the end of the expansion, I think we'll see that in the next few years, and that will drive many things, good or bad, at that point.
That's interesting. That's the second time we've heard that on this podcast, talking about the whole debt bubble and having to manage around that and considering the potential opportunities that come from that, but also the risks that you face right now.
Right.
What's one thing that you know now about investing that you wish you knew 30 years ago?
Oh, gosh. There's 30 years of experience, I guess. I don't know if it's one thing, but just having the experience of knowing, in fact, what's happened in the market recently is a great example. I mean, the crash in the market recently, the Corona crash, I guess, if you want to call it that. Knowing how to deal with a situation like that, how to respond from an investment perspective. I mean, you get a lot of questions. What are you doing? How are you reacting to this? And there are many situations where it's best not to react. You do more damage than good if you react from a trading perspective.
So it's a behavioral element that you've kind of learned.
And just learning how to deal with those types of that potentially stress things that are very stressful to the market and how to deal with them. Yeah,
and that comes with time and experience and
that's something obviously I didn't have 30 years ago.
So let's get into our speed round, our trend or fad. I will mention a concept, and you can tell me whether you think it's a trend or fad, and you can expand upon that if you'd like or not.
Okay.
So first one, cryptocurrency, trend or fad?
That is, I'm on the fence there. Today it's a fad, but in the longer term, I think it's a trend. I think cryptocurrencies, it's a new asset class, and its place in the financial system hasn't been determined yet. I mean, blockchain is definitely here to stay. It's a very useful technology, and it's yet to be seen how cryptocurrencies will really be used in the financial system.
You're seeing central banks starting to look into projects or develop digital currencies. You think that will actually play out and come to fruition?
Probably. I mean, it wouldn't surprise me to see central banks start to adopt a cryptocurrency, something that they can use in parallel with existing currencies, is the way I would see it.
Fake meat, trend or fad?
I think that's a fad, and maybe I'm old-fashioned, but I have a hard time with eating something that's supposed to be meat. I mean, I can eat broccoli if I want to, or I can eat a hamburger if I want to, right?
Like the real thing. Modern monetary theory, trend or fad?
Unfortunately, I think it's a trend. I think the financial system of governments around the world, with the tremendous amounts of debt that have piled up on their balance sheets, make modern monetary theory an unfortunate solution to the debt problems.
Spin classes, trend or fad?
I maybe that's a trend. I mean, I go for the real thing. If you're going to spin, get on a bike and ride down the road.
That's right. I've seen you actually commuting to work on your bike.
I ride every day on a bike. Yes.
Rain or shine?
Rain or shine. If it's icy, I'll take a cab or the subway. But yeah, year round.
Getting news from social media, trend or fad?
What kind of news?
Any news. Getting news from social media.
That's another maybe unfortunate trend. It's hard to verify, and it's lots of times there's a lot of misinformation out there, and we see that particularly in the gold mining industry or the mining industry in general. I mean, just a lot of misinformation and around environment and social and all those sorts of things. So yeah, an unfortunate trend.
Joe, thank you very much for joining us on Trends with Benefits. How can people find you or follow you?
Well, I put out a monthly report every month to shareholders where I go through how gold is behaving in the markets, what's driving it, my thoughts. There's usually something very current and topical in that. I try to make it interesting and up to date, giving our outlook and thoughts. So there's that, and we have webinars. We have get on our website. One of the benefits to using VanEck is the access to our thought process, our portfolio managers, our thought leaders within the firm. So we're very accessible.
Yeah, that's right. Check out vaneck.com and look at the Insights tabs, and you'll find a wealth of information and newsletters, as well as Joe's monthly commentary.
Yep.
Thank you, Joe.
All right. Appreciate it. It's good to be here.